Hi, my name is Celeste Smith with RE/MAX Associates, and this is John Thomas, my lender partner, with this week's update.
Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of September 22nd, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week mortgage rates did move slightly higher, but were able to stabilize and find a level of support. If you take a look at the bond chart on the screen, you can see the big arrow down showing that the short-term trend has been for mortgage bonds to sell off, which has moved interest rates higher. But if you see the dark line there at the bottom, we were able to hammer out a line of support. Mortgage bonds held there on Wednesday, rallied off of that on Thursday, and then on the green candle. And then Friday, we're able to rally higher again. So we're going to recommend floating your Delaware mortgage rate to start the week to see if mortgage bonds can move off of this bounce higher. We did mention a couple weeks ago we were expecting them to find a floor of support and rally back because they have been oversold. So it looks like we hit that last week, right at the end of the week. So we are going to recommend floating to see if we can get a little bounce back in the mortgage bonds and give us a little bit slightly lower interest rates. Now, if we look at what happened last week in economic news, the big thing was the Fed's meeting. They met Tuesday and Wednesday. Wednesday released their notes, and as expected, they're going to continue tapering their asset purchase program called QE3. They're currently buying $25 billion worth of mortgage bonds and treasuries. They decided at the meeting to cut that back by another $10 billion. That's been their what they've been doing every meeting. So they're only going to purchase $15 billion worth of bonds and treasuries every month. Their next meeting's in October. Everyone expects them to cut the last $15 billion and be done with the asset purchase program. So at that point, bonds will be all on their own to see where they work out. There'll be no support from the Feds in terms of that. So we'll have to see how that affects mortgage rates. With them pulling back, if the stock market doesn't sell off, that could move interest rates higher. So in the short term, you can float, but long term, get under contract, lock in these low rates because the headwind is for mortgage rates to increase as we go to the end of the year. Last week we also saw weekly initial jobless claims come out on Thursday. That was a big shocker. Jobless claims dropped 36,000 claims to 280,000 claims for the week. That's a huge drop, much lower than the 305,000 claims expected, and that's the lowest claim since July 2014. So that is foreshadowing a strong September jobs report, which again, if that comes out good, that could be a bad sign for mortgage bonds. It could sell off and shoot mortgage rates higher, so we have to be mindful of that. We'll keep you updated on that. Last week we saw two reports on inflation. They came out very good. The first one we saw was the CPI, Consumer Price Index, measures inflation at the consumer level. That dropped from 2% down to 1.7%, so that was a good sign because inflation had been heating up beginning of the year. And then the PPI, the Producer Price Index, which measures inflation at the wholesale level, and this had been pretty hot. That actually came in good year over year at 1.8%. That's below the 2% that the Fed's target is. So great news on inflation. Inflation kicking in is an enemy of the bonds. That's bad news for mortgage rates. So if it remains tame, that is good news. So we'll keep you updated on that as well. And then in housing news, the National Association of Home Builders released their housing market index for September 2014. It increased 4 points to 59 from 55 in August. That's the highest reading since November 2005. What this housing market index shows is that builders are very bullish, very strong on housing right now. They think they're going to have a good run the end of the year, good run 2015. That's what this index is showing. So that is great news for new home construction. Now, we did see two reports come out last week on new home construction, which the media touted as negative, which weren't really negative if we dig into them. The first one was housing starts, how many new homes the builders started building. That actually came in at 956,000 units. That was a decline of 14.4% from July. This was August numbers. That seems like a bad report, but if you look at August, it was actually July. It was actually revised higher in this report from 1.093 million units to 1.117 million units. So that's a 23% gain in 1 month from June to July. So no way we're going to hold that. So the 14% decline, if you look at the 2-month average from August and July, we're still up 4% on housing starts. So not that bad of a report. It still shows new home construction is doing good. We're close to 1 million units. We're okay. And then building permits also came out last week. and that came in at 998,000 units. That was a decline of 5.6% from July. But again, July's figure was revised higher to 1.05 from 1.052 million units to 1.057 million units. And if we look at the 2-month average for building permits, July and August, we're actually up 3%. So even though the media made the reports look bad, they're not bad. New home construction is still trucking along. Home builders are still feeling very good about the market. So that was actually good news there, even though the media didn't spin it that way. And then some news out of Fannie Mae. Fannie Mae had a special loan product called the Home Path loan, which is for their properties they've repossessed and are now selling. You're able to buy these properties with this program with no mortgage insurance, no appraisal, some other features. Well, they announced that that program is ending. The Home Path and the Home Path renovation loan are ending October 6th. So you got to be under contract by October 6th. Now, in the blog, there's a link to a full article on the Home Path program, what you need to do, when it expires, when can you close, because you can still use it, but you don't have much time. So check the blog out for that. In the local news, the next first-time homebuyer seminar is in Dover, Delaware on Saturday, October 11th from 10 a.m. to noon at the Dover Holiday Inn. And then the next one in Newark is Saturday, October 18th, and that is from 10 a.m. to noon at the Christiana Hilton Hotel.